Hello, darkness, my old friend. I've come to talk with you again.
Welcome back to the channel where we go over the S&P 500 and the Nasdaq one. We have a lot to talk about here on the day. We had some interesting price action. If you've been watching the videos, then we clearly had a bullish thesis, but obviously we've broken through demand and we have to go over our next targets and possibly flipping the trend back to bearish. But we talk about everything that has to happen for that to be the case. And before we go any further, I have to ask you to do two things. Please like and subscribe, but only if you get anything out of this. If you like the content, please come back for more. It's unbiased, win, lose, draw. I tell you what happened throughout the day, what I was looking at, what went wrong, what went right, and ultimately the viewpoints of the market so you are prepared every single day. Now, the first thing I want to jump into is something I posted on Twitter. If you're not following on Twitter, it's basically the only place I can give you like free updates all day long. But something basically like an hour before close is we were sitting on ES at 4,100. We're going to go over the significance of that level and where we're at. But he had about 1,000 lots sitting there. So that's around $20 million sitting on support. Now, the reason why this was interesting was because before this happened, if we looked at SPY volume on the day, you were really only at like 50 to 48 million. It was very, very low. Power hour, you definitely got a lot of volume kicking in there. And yeah, it was a mix of buying and selling, which we'll talk about here in a second. So the end of the day, very interesting. From what happens, you get a little bit of a spike in volume. And then once you hit that level, which we broke through and I posted on Twitter so everyone could see, you started to see a ramp up in volume because you were definitely going to need a significant chunk of volume to push you through that massive support, if you will. So there's a few things we need to talk about and where we're at. Now, I don't cover Bookmap too much and I don't cover the volume extensively on Nasdaq, which I do watch it, but SPY is just a better visual of the entire market. That's why I love using SPY's volume. Even though NQ is leading, I think that's still really important to watch for. So when we jump back into NQ, key level here was basically 12.47-ish, and then we had our obvious demand there. So again, just showing you where these levels are at. If you haven't been here on the channel, this was our swing low that we had back of when last February, I believe, is this level right here that we're watching. Actually, it's hardly, no, August right there is our swing high that we had right there. And then we can go into ES and SPY and look at all those key levels also. But this is where we're looking at and kind of where we're at right now. So we can see we're moving down. Now, we're breaking through that. Now, the big point I want to mention here is if you look at what's happening and where the volatility is, in my opinion, there's practically nothing, right? From the bottom of this demand, 12.45 all the way down to lows around 12.1. You can even say arguably 12.2, right? Conservative side for a target. So when we start to break down from this level, it's very interesting that you don't fall through much quicker. And we actually saw into the day, we started to see some buyers, but ultimately sellers pushed those guys back down. So this is very interesting behavior that we're seeing. Now, for people to say, you know, this was a giant bull trap, it's this, it's that. No, this is not a bull trap, people. Like, we can go over bull trap examples one day, but it won't be today. But this is definitely not a month-long, bull trap, right? So we don't consider these bull traps. We consider those, markets where you bounce, you get a rebound, you get rejected, come back down. Now, we're not even at the point of saying that we're coming back down because if we look what happens in the broad scheme of things, which I'm going to go into more of exactly where we're at and where we're going, you can see here that obviously we're still broken out of the channel. We're above the 200 SMA. We're still holding up. But ultimately, you want to know what to trade tomorrow. What am I going to be trading? What am I going to be looking at? So right now, as it stands, we have to be looking at a few things. And again, if you're on Twitter, I kind of give you my viewpoints. And I gave you all it earlier. I said if we get below 12.45, this demand, I got to anticipate you come down to 12.2. Or possibly even this the demand. I mean, really, it's the demand down here that you have going down to 12.15. So that's where right now we broke out of this pin and you're breaking out. Again, on time frames, the breakdown looks really good. Now, for the people that want to see, long-term bearish thesis to flip back to an overall bearish market to where you're expecting heavy downside, I think you have to make a new local low and you have to break down kind of out of this trend. So I'd be looking for a break of basically 11,800 when it comes to the Nasdaq. Right now, we still have 600 points till we get there. So I don't think we're there yet, but keep it on your radar. We go and look over at ES really quick. Also, you can definitely see what's happening here. Now, some people were trying to say you're breaking out of your trend, you're this, you're that. And again, I try to be as unbiased as possible when I trade, right? Because at the end of the day, if I come in with bias, typically I'm going to get hammered and I'm going to lose. So we'll even move this up just a little bit, the trend line, just to appease people. But if we see the top of this trend, you really have to bring it down further too. That's the thing. So you have to bring it down further and just the top. Really you want to have it at the bottom of all these levels. I'm just saying you're still in the trend. You're still in the upward channel. Now, big things that happened here, like we said, 4,100, you got below it. Very big. But if we look here as well, we're following supply and demand. We're looking at these viewpoints. You're in demand on ES, and this is where things start to get interesting for us, right? Because your demand has to come all the way down to 40.50 because that's where that wick is. But if you want to say, conservative demand, about this range, 40.87 down to 40.65. But I would have to draw it all the way down to that wick, just so you know. So that's where it's going to be for me. But when we look at this, you're in this sticky situation to where Nasdaq has downside opportunity, and Nasdaq's been leading. So I do anticipate if we are flipping or showing any signs of selling, Nasdaq should lead the way to the downside because that's what's led all this upward movement, right? And so when we look at that, I'm like, I'm not too concerned with ES being at demand. But the thing that worries me and the sign that I look at this downside and it holds me from flipping my full thesis to a downside area, it is the big six. And I keep referring back to this chart, and some people may not like the chart, but it is what it is. This the big six. So it's basically we made our own little ETF. We it's Apple, Microsoft, Nvidia, Google, Amazon, Tesla, right? So you throw these all together and you look, and we look at the movement, right? So when we look at what happened with SPY back in October through December, we saw SPY moving up, right? We can go back and look at SPY. We'll come back to this. SPY October was really rallying, moving up, right? We go back to this chart though, and during that time, the big six really wasn't moving up. If you remember, Apple made a new low, really shot you down at the end going in the middle of January. We had Tesla. We had a lot of big stocks finding new lows, crazy, really, really getting hammered. But as of recently, you've had this really nice rally. And this is where we come back into the thesis saying when NQ leads on the market, that's what you need to see for you to be hypothetically bullish. Not even say you're in a bull trend, but just to say that you want to play the upside on the market. I'm not looking to go heavy into the big caps until I see the Nasdaq leading. Why? Because the Nasdaq is the most heavily involved with the biggest tech names that you're watching out there. And when we look at what's led the market so far, Nvidia, Microsoft, Tesla on this rebound, a lot of those are primary Nasdaq stocks, right? Apple, definitely more SPY, and Apple's had a great run, don't get me wrong. But when we look at this, it's very interesting to see. So when we had SPY leading, we really saw no movement, a lot of consolidation sideways, and then we broke down. But when we see Nasdaq leading, you get almost parabolic here. And I would argue that this run is stronger than the run we had back in basically June through August, which was a great rally. You could also argue this is stronger than the first rally we had back in March from the initial Ukraine news. Now, from this and when we're watching, more things stand out to me. When we look at what's happening, this is the daily time frame if you want to check it out for yourself. You're really just making higher lows and higher highs continuously, including today. That's another thing we need to mention. So when we go back and look at NQ, which NQ is, in my opinion, the leader here, you're bouncing at basically your swing highs you had back in December, which we'll go into that in a second, and you're trending down here basically since last Thursday, and you're getting interesting behavior. And this was the day, I believe, after the Fed meeting or the day of. So anyways, this is where you're at and you're trending here. Now, again, bold statement, bold claim, but I'm just showing you what's forming out here. It looks like a clear bull flag. I'm just going to tell you right now. So this is why I'm saying, and again, I'm extremely liquid. I'm cautious. I'm looking at this. I'm like, we broke through demand. I'm not betting on it yet. I need confirmation before I do anything. So I don't even want to come across with a sense of saying that we're going to break up, but I'm not going to run into puts. Again, when will I flip really bearish on the market? If we make a lower low or if data shows us that inflation is on the incline again. Okay, that's when I believe the market will pivot back to a downside thesis. Until then, we're running with this notion of what the Fed is telling us. And I know everyone wants to disagree. Everyone wants to say, no, we're not. The Fed's bearish. I don't really care what we say. I'm just saying what's been told to us time and time again from every single Fed meeting since November. Again, So we have this type of bull flag. We're back at the 90 EMA on the daily. And again, if you look at this chart, every time we've touched the 90 EMA on the daily, good things for some reason continue to happen the day after. So again, I'm not even saying that we're going to rally. If there's any time to sit on your hands, it's probably right now, because going into next week, we know Tuesday we have our CPI data pull, which again points us to the overall trend. So there's no reason to get too aggressive here, right? We've had a great 2 weeks. Like I always say, it's better to sit on your hands and not make money than it is to throw money at the market and lose on bad trades in general. I'd rather not make money than lose money. That's my slogan. But to throw money at bad trades or forcing opportunities, I don't see the point in that either. I keep getting people saying, well, you could make money shorting this again and again and again. And I'm like, you can. I agree, because every day you've been popping up and then shooting back down. But again, if we look at the channel and we look at a lot of the big ones that we've had here, if you've taken like any of the trades that we've mentioned, we've seen a significant increase in the gains of the trades we're taking when we're following the breakout trend. Why? Because we're getting pretty intense volatility on that upside. So when you trade with the trend, typically your gains are going to outweigh trading some sort of range, which is what we've been in the past basically 5 days. So we haven't got any of that breakout opportunity. So again, looking at this, really big for me. And it's just, it's something doesn't sit right with me. The fact when we look at what's happening on volume here is that we're steadily declining here on volume. Okay. Now we had a decent little pop here near the end of the day, but for the most part, we're still declining here. It's not significant, but we need to talk about the fact that we're declining here, okay? If you go to like something like the 4 hour, you might be able to see it a little bit better, but you can still see, again, the upside on the 4 hour volume ticks are all to the upside. The buying has definitely outweighed the selling when we look at overall strength. So this is just the question mark that I have. And again, this isn't to say that we have to run or we're going to, right? I'm pretty neutral looking at this. The only good thing that we have going for us is that ES is sitting at demand and that you haven't broke December's highs yet. That's the good note that you have, right? And obviously the 90 EMA going on there. But we still have that data pull coming from Tuesday. And this is something I think we have to be paying attention to also. When we look here, this is your year over year CPI, and then you have your month over month. So both of those will be announced on the same day, Tuesday next week. So if we look here though, this is where things get interesting. And I told you when we looked at this data that you weren't going to continue dropping 0.5% time and time again, right? So when we go back to like September, we were getting massive drops, right? So we had 6.6, and then we dropped, 3%, 0.3% down to, to 6.3. Then expectation was, it was for 6.5. So we had a much better beat there. Then we dropped again to 0.3, again, dropped 0.3 again. Now they're expecting a 0.2 drop. Now this, I probably expected to come out almost flat. I don't see it being a big beat. I don't see it being 5.4 or 5.3. That'd be a shocker for me personally. What we do know is that consumer credit has dropped significantly. It's borderline atrocious. It's terrible. It's literally got slashed in over half if we go look at that data. But then we look at month over month, and this is where I think there's potential for good news here. So month over month, if we look back at November, you came in under that, which was really bullish. Then December, we came in obviously 0.3 again, which was spiking up, which was on the forecast. And now they're forecasting you to come again month over month at 0.4. This is interesting because I don't necessarily think you have to run back to 0.4, because what are the catalysts for us to believe that inflation will start to spike again? And even 0.4 wouldn't be a nasty spike, but it would be a rise overall. Really, you're looking at energy and rents. We know rents had their biggest drop month over month in over a year, I believe. So that's really important to realize from last month. So I don't know if rents are going to be spiking that much. We all know that if we're going to have a catalyst for the downside, it's perfectly synced up with summer, because the catalyst that usually spike that we're most concerned about, rents and energy, typically energy spikes going into summer, and so do rents. That's just the hot times for those specifically. Winter months, typically both of those drop. So November through February, we don't have high hopes or high expectations of energy going up or even happening with rents. So that's what I'm looking at there. So again, this is where you have to start thinking about what's going to start happening with data pools again. And if you're not looking at data and you're just looking at the chart, I think you're doing yourself a disservice, and I think you're really gambling, right? I love TA. I think it's very, very essential. But when we look at what's going to pivot the market to really become bearish, which again, I think you're going to have a lot of downside in the future. I just don't think you're ready for it yet, especially with what we're seeing from indexes. And I waited till the end of the day to make this because I wanted to make sure we're ES closed. And ES closed below 4,100 on the daily so far. So when we look at this, you have every sign that you should be pushing down. Yes, ES is still in demand, again, like we said, but you're below 4,100, which is a massive, massive level. NQ, you broke demand, you're pushing down, right? You argue, again, we can argue it's a bull flag, but that's besides the point. Major supports have been broken. But once again, you're not getting follow through. And this has been the problem the whole entire time, right? This is what we have to talk about. When we look at what's happened, we've had sellers start to be aggressive in the market. Push down, push down, push down, push down here, right? And this is your first sign of possible continuation. But the problem is we stagnate and then buyers show back up and they push us back up, usually on some sort of data pool. And that's where we're at right now. And again, it's looking like the same thing could possibly happen going into Tuesday. So again, we have 3 trading days until then, but these are just my overall thoughts here. And again, like I always say, every day, what do you want to do? Go into the next day liquid. That's our plan, right? This is the channel you've been trading in, right? I'm not manipulating the bottom here, right? No one get mad at me. No one. I know some people start to rage when I post this, like, Tyler, that is not the channel. I'm like, okay, well, post what you think is. Anyways, you can see we were on top of it. We broke back into it, and now we're just right back there. And it's hilarious that your December highs line perfectly up with the bottom of the channel. Again, coincidences, hard to say, but when we look at this, it has to leave you wondering, is this a potential bear trap? That's my giant guess I'm throwing out there. And again, on Twitter, this is why I post everything on there. And again, I always get hate, and these are my losses on the day. So AMD was about break even, a little bit under, so it wasn't a gain. So I lost about, I think it was like 700-800 on the day because of Netflix, and then on top of like the 200 I lost on AMD. Anyways, so when we go back and we're looking at what I said regarding the bear trap, and again, you should go Google what a bear trap is. People keep saying that this has been a bull trap. Well, bull traps don't last a month. Just saying, right? Or they line up with volume, etc. So you can look at like the key things when you're looking at the bear trap. And I don't want to make an educational video right now, but it's just food for thought. And again, when you come to the channel, I encourage, if you watch the channel, only watch it if you're unbiased, right? You gotta have thick skin here. I control myself. I control when I'm wrong. It's good, right? I like that. But if you come here with a notion every single day that this has to happen, this is gonna happen, you're probably gonna hate the channel. But if we look here, one of the big telltale signs of traps is low volume. And again, since our last push we had, right, to basically 417 almost, right? Great volume that day. We ended up closing back down at 415. It was a good day, right? We started off bearish, bulls took over. Since then, every bearish day, very low volume. Our average 30-day volume on the S&P is around 78 million. It has been dropping, right? But I just want to identify sell side days, low volume, low volume, low volume, low volume, low volume. Food for thought. Take it for what it is. Again, I still expect the push down to 12.2 based on breaking below demand. But when we're looking here, I think people need to wake up to the idea that it's not going to move solely based on technicals here. You're not. You're really preparing for CPI once again. And if we go into CPI pushing down, pricing in possibly some downside data, it leaves you with a lot of risk towards the upside. Because when we go into last CPI, what happened? You had all your movement before CPI. So when CPI came out as expected and was a great, a cool read, guess what happened? You actually ended up dropping and spiking and moving sideways, right? So nothing really happened. But if we come in with downside and we're not pricing in any good data and we're pricing in a drop or a bad read, then it leaves you with the risk of a surprise and shooting up. And that's kind of where this is looking like it could play out. Again, when we look at the grand thesis of everything that's happened, I'm happy. I'm beyond happy. You came up, we hit 12.9, almost 13,000 flat. You got rejected so far. But again, it hasn't been a hard rejection. There hasn't been big sellers. It's been very low volume. So when I look at this, I anticipate trying to find a local bottom pretty soon and getting a bounce maybe into CPI or after CPI. But again, I don't know how that data is going to read. I'm optimistic about it, but we have to wait and see what happens. So right now, that's what I'm viewing. That's what I'm looking at. We have a Fed speaker tomorrow, so make sure you check that out. And I believe tomorrow we also have the Michigan consumer data, I believe. I do want to make sure. So right here, you can see going into tomorrow at 10 a.m. So around 9 Central Time. You have the inflation report from Michigan, consumer expectations, and this has a decent little impact on the market. So I would be checking it out and waiting for it. But this is what I'm watching for. This is what I'm expecting, and that's the market real review. I don't want to cover any other stocks. This is what I'm looking at specifically. And last thing I'll view is VIX for you guys. People talking about VIX. Again, you came back down to that $17 region. You bounced up to 21. This isn't a strong move on VIX either. You know what I mean? You broke that downtrend, but VIX, we don't operate in trends. We don't really care about that, right? But if you're looking, you broke out and you're just at 21. Yields are interesting. Great bounce back day on yields, 10 years specifically. If this continues, I do see some danger in the market. TLT, bottom of the trend. I mean, there's nothing too crazy here. DXY, interesting behavior also. Getting a little bit of a bull flag. Could this break up? Possibly. But again, everyone that's saying that if DXY goes up, the market has to go down. I'm just saying, when DXY dropped from November 9th into January 31st, it really didn't start moving up until after January 6th, January 5th, right? Can we all agree on that? So you had no real upside on the market throughout this time here. Food for thought. You actually ended up making almost new lows on the Nasdaq. So when I view this, you have to look at it from all viewpoints. You can't just say, oh, well, now I think DXY is going to affect the market. You got to look at the underlying issues that are moving DXY where it is. Is it all based on the US market, or is it based on the global economy? But again, last thoughts, last viewpoints, ending the video, ending today. Target here has got to be down to the next demand zone when we're looking here, roughly around 12.16 to lows of 12.08 on Nasdaq. ES, you are inside of demand. You break below this, your next demand's at like 39.20, so that could be a little bit brutal. You could argue of a demand here at 40.30, but I don't think that is one. You could come back to like maybe the 1 hour, and again, y'all know how I feel about 1 hour demands. Don't care. The next big one's definitely 39.20, so that's a long ways, almost 200 points of downside opportunity if you start to break below these big levels here. So again, what I'm looking for, what I'm watching for. I'll see you tomorrow. Have a good one, traders.